Hey, coming to you from my backyard on this beautiful Sunday morning in Birmingham, Alabama. I received an inquiry or a comment just yesterday from Jeremy. Carrie, me and my girlfriend have never invested before, but we have $10,000. Congratulations, Jeremy. Um, and we really want to invest. Where do you think the best place to put it right now? We don't even know where to start. Well, I've received a number of comments like this, and I encourage them from my videos. And I think what I would suggest you do, Jeremy, and anybody else who's in this situation, first of all, since you said girlfriend, you need to consider how you own it. It depends on your state, but I think, first of all, it needs to be a joint account. I've used E-Trade for years, and I use E-Trade, and I would recommend them right now because they don't charge you anything to trade. They make their money basically if you have money sitting in cash. They invest it and collect the interest that they might, and then they make money off of people who trade options and some more mutual funds and things of that nature. So they do the trade for free for individual stocks and ETFs. So I would guide you towards those two things. ETFs stands for Exchange Traded Fund. Unlike a mutual fund, which only your holder of the mutual fund, you only get the price at the close of market. But an ETF you can trade during the day. So I would guide you to that. Then from that point on, there is no cost. They actually will open an account for $500. Then you have a more active type of account if you have $1,000. So Jeremy, you'd qualify for both of those. You basically just send them your money, and after about so many days, when the funds have cleared, you can go in and actively trade. And it's a pretty easy learning curve to figure out how to do that online. From that point, the question becomes, as I said, ETFs or individual stocks. With $10,000, I might lean more towards ETFs because the stocks I talk about, Amazon, Google, Apple, Facebook, the cheapest of those are in $200 range. So you aren't going to buy a lot of shares and you aren't going to get a lot of diversification. So what I've done is I've gone and I've done a little research on some ETFs that are technology oriented. And so what I want to do is take you to my trading charts and show you how I would look at the stocks and determine what I wanted to buy. And then I'm going to also show you how you can do that with ETFs and how you can go to a second website and find out exactly what the holdings within those ETFs are and what their expense ratio is. So let's go to that, and then we'll come back and address it a little further. Okay, before you open your trading account, whether it be Scottrade or E-Trade or any of the others that offer you free trading in both stocks and ETFs, I would suggest you go to what I use, tradingview.com. And this is a free charting website. Walk through the process of opening it up and then create a portfolio of stocks that you're interested in. Now, in your case where you've got $10,000 worth of investments, you probably don't want to be buying individual stocks like Google and Amazon, or you're just not going to have any. And with your portfolio, with your $10,000, you'd be able to buy 4 shares of Amazon. But on the other hand, you could buy, apples at $289 a share. You could pick up some of them. The first thing I always do is I want to look at the history of the stock and see where it is trading relative to its historical trading channel. And that's what I've created here. I go over here and I go to trend line and I click on that, and it gives me the ability to put a trend line in here. And you can see what this is what I've done here with Apple. First of all, how I get Apple. I go in here, up here at the top where it says enter symbol, and I type in AAPL. It comes up and shows me Apple. I click on it, and it creates this access to this chart. So that's how you set up the stocks that you want to watch. What I believe is that stocks trade in a channel. Sometimes they get out of that channel and go way above. That would be, to me, if I was owning Apple at this time, I'd say it's getting out of its trading channel. It's getting overvalued, and I'd sell it here. At the same token, you can see it got out of its trading channel, and it gave a very strong buy signal way down here. So that's how I set up my trading channels and determine how I'm going to buy and sell, and if I'm going to sell something that I hold if I see it's getting overvalued. So in the case of Apple, right now we see it's within its trading channel. This dark red line is, I have gone up here and under indicators, I have asked to see the 200-day moving average. Now, something else that I think is very valuable is I can move this over here and have my starting point at somewhere around April or March, so I can see how far it has dropped. If I go down here to this star, I can change my right-hand indicator from price to percentage. And I can see at one point, this is Apple, got down 25%. Okay, so I can see right now from its high, it's down roughly 9%. Is that a buy? I don't really know. I believe that certainly, as I say, it's down 9%. It's selling at a discount. So if you believe what I believe, that as a result of all the money that is being pumped into the market, I believe Apple will surpass its high of February. Looks like somewhere around February the 11th. So that's what I would buy. Now, let's say that in your case, you have $10,000 to invest, and you're not really comfortable buying individual stocks. Well, with E-Trade that I use, you can also trade ETFs, exchange traded funds, the same as you trade stocks with no commissions. And so I have looked and found several. This is Vanguard's World Information Technology Fund. And I did basically the same thing. I set up a channel to see how it trades, or how it is currently trading. And as you can see, it is down from its high, but it's within its trading channel. This is a good alternative. So then the question, and I've done a couple of them. The Vanguard, then I've done, this is iShares Trust Technology ETF. Again, you can trade it with no commissions. And then I did a third one, and that is Select Sector Spider Trust Technology Fund. So you can see they're all within their channel, but down substantially from their heights. So the next question I'd have to ask is, okay, I'm leaning towards the ETFs, but I want to know what the holdings are in these ETFs. So then I want you to go to Zacks. This is Zacks.com. It's /funds/ETFs. And then you go up here and you enter the ticker symbols of the three that I showed you over here, the VGT, the IYW, and the XLK. So we're looking right now at the IYW. This is the iShares ETFs. And then this is, I clicked on profile, shows you it's selling for $234, but I want to go to holdings. And in holdings, it tells me exactly what percentage of these stocks that this portfolio is made up of. And as you can see, it has Microsoft, Apple, Facebook, all that I like, Intel, something I don't own, Cisco I don't own, NVIDIA, I know NVIDIA, this is a gaming stock, excellent stock, Adobe, I use Adobe myself, Salesforce I'm familiar with, and of course this is Google. So adding these up, roughly 45% of the stocks are in the technology stocks that I personally want to invest in. So I kind of like that. So then I go back and I say, okay, what is another tick? Let's look at VGT. So I come up here and I type in VGT and hit the looking glass, and it takes me to VGG. It sells for $242. If I click over here on holdings, it shows me, again, very similar, Microsoft, Apple, Visa, Intel, MasterCard, a little bit more towards credit cards, it looks like, Cisco, Adobe, NVIDIA. I don't see any Google. If I want to go deeper, I put the top 25 holdings, and there we see what it holds. It is, again, looks like does not have Google. Neither one of them did I see Amazon. But this gives you a way now to say, okay, rather than invest in individual stocks, and that's a decision you have to make, I can invest in an ETF and I can get the exposure that I want, and I don't have to pay. With an ETF, you do pay an expense ratio. And this looks like it's 0.1%. It also pays a dividend. So that is something that you'll want to consider. If you're buying individual stocks, you don't have an expense ratio. In essence, what that is, this is your management fee that you're paying. So that's how you use Zacks. That's how you use tradingview.com. Okay, so I think I'd steer you, as I say, towards ETFs, and you might want to get into two or three of them, and you might not just want to be in technology. You may have some other interests that maybe my videos have cued you to, and so do your research and find out what the holdings are in, and then invest them. From that point, then I think it is a matter of a continuing investing program. This is something that Shaquille O'Neal taught me. So, not that Shaquille and I are personal friends, but Jeremy, I'm assuming that you and your girlfriend both work and you earn money. You should take part of that money every month, and if it's 50%, take half of it. If it's 25%, if it's 10%, whatever percentage of your earnings it is, take part of it, and every month invest part of it. And set it up as a dollar cost averaging. Again, now whether you are, and I've done a video on dollar cost averaging, whether it's 50% or whatever, have it pulled directly out of your checking account on a monthly basis, or you get in the habit of adding it to your E-Trade account, your Scottrade account, whatever it is, and systematically invest every month. Don't get crazy about is it up, is it down. Just systematically add to your investments every month. If you'll do that, that $10,000 will grow to 100,000, and then it'll grow to 500,000 and then 1 million. I don't know how old you are. I'm guessing you're in your 20s or 30s. And you will build a nest egg of assets. The other thing you have to do, particularly now, is be conscious of the fact that we are in a time of change. Amazon is hot right now, but as Jeff Bezos said, someday we will go bankrupt. And he's right. Some piece of technology will make Amazon obsolete. Some piece of technology will make Facebook obsolete. I'm reading a book right now about artificial intelligence that says advertising will be a thing of the past within the next decade. That in fact, we will have a concierge artificial intelligence that will make all our buying decisions for us based upon what our concierge knows about us, knows about how we dress, what we eat, what we drink, what we do. So there will be no reason to advertise to us. So Google, which mainstay is advertising, and Facebook will be obsolete. So you need to educate yourself, keep yourself educated, and then decide where to invest your money and to invest a part of it every month. You do that and you'll be wealthy. Okay, that's my take on Jeremy's question. There's a lot of you who have been in investments that watch these videos. Please put your comments. And Jeremy, you look at the comments on this video because it's made for you and all the other people that are in Jeremy's situation, and learn from the best of us investors. We're going to grow this to over 1 million, and we're going to have a bank of minds that are unparalleled in the investment world. So, Jeremy, thank you for your question. And I'd encourage other people, you got questions, share them. I'll try to draw out some of the other people in our tribe to help you make good investment decisions.